Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Markets reacting to an investigation into $460 billion giant UnitedHealth.
It's a doozy. It's a doozy.
About the company's Medicare billing practices, former FDA head Dr. Scott Gottlieb.
There's an incentive in the program to get patients diagnosed and manage the healthcare patients more aggressively, and they're paid for doing that. And so, health insurers have responded to that by implementing these systems that prompt physicians to look for these diagnoses, code for them, and then bill for them.
And never mind, the SEC intends to drop a years-long lawsuit against Coinbase that attempted to regulate the crypto platform like a stock exchange. CEO Brian Armstrong joins us first on the news.
They're fully withdrawing the case, and so we're not changing anything about the business. We're not paying a single dollar as a fine, which I believe is quite unprecedented in SEC history.
Plus, the latest in the alphabet soup of targets for Elon Musk's Department of Government Efficiency, Trump and Musk versus the IRS.
These government layoffs and the violins and the crocodile tears are out, but the private sector does this all the time.
It's Friday, February 21st. Squawk Pod begins right now.
Stand Andrew by in 3, 2, 1. Cue Andrew.
Good morning and welcome to Squawk Box right here on CNBC. We are live at the NASDAQ Market Set in Times Square. I'm Andrew Sorkin along with Joe Kernen. Becky's off today.
Apple CEO Tim Cook reportedly met with President Trump at the White House yesterday. I think Tiger was there too. Adam Scott and the PGA Commissioner. I think they're all there. The topics discussed, we don't know, but Apple is at risk of being a victim in President Trump's fight with China. China said it's considering a probe into Apple's policies and developer fees during Trump's first term. Apple won tariff carve-outs for its iPhone. This time, Trump has said he's looking to avoid exemptions. I think that we're going to, much to the chagrin of the China hawks, I think you're going to see Trump cozy. I think we're going to be, it's important to both countries.
That we're going to be friends with China?
Yes. Don't you think?
What are we going to be with Zelensky then?
I think when he pushed, Besant was there.
Yep.
Gave him the paper. We've given him how many? 200. I hear 200 billion.
200 billion. I've heard
I hear
that
350.
Yep.
I hear 200, 350. You have this stuff. You owe us. Just sign this. Let us have some of this stuff as recompense. Because I think we're still remember what happened with Iraq, where we got none of the oil. Remember, we did all that, and all that money was spent, and there was no deal for any of the, to be paid back. And so I think that's it. And I think when Zelensky said, no, I'm not sending it, I think that made everyone mad.
Oh, I think it was worse than that, because I think what happened in the meeting was he said, according to Rubio, I'm going to go back to my legislator to get something like this approved. And that, in the room, seemed like a maybe reasonable thing to do. And then when they left the room a day later, he was out there telling the public that he rejected the proposal. So I think that it's that dynamic which is even more frustrating.
You saw Waltz yesterday on an interview. He has unequivocally said that Putin is basically the devil and now he's saying, do you think? And he wouldn't even answer. So they all got to serve at the at the feet of the president, and the president is mad that Zelensky didn't sign that. Do you think? I bet you that he eventually signs it, though. Maybe a smaller percentage. What do we want? How much now? We want 500 billion. That's a lot.
I don't know. I think if you get to even, you'd be happy. To be honest with you,
and that's fair, isn't it?
It may be. It may be. I don't know how you divvy it up. Meantime, you can take a trip there if you'd like, because Booking Holdings shares they're higher this morning.
I don't think so.
You don't think you can?
To Ukraine? No. Maybe.
Earnings of $41.55 per share. They beat estimates of $36.03. I'm just saying the bookings folks would probably like to help you organize that trip if you want to do it. 36.03 revenue. The key metric of room nights booked also beating estimates.
A big trip to Kyiv. No, I'm afraid to go to China. I'm afraid to go to any of them. I maybe go to Florida. Florida seems friendlier for me. You'll go all those places, right? Did you go to Russia?
Would I go to Russia right now?
Yeah.
For an interview with Putin, I'd go to Russia right now. Otherwise, probably not.
Okay. Some executives at Meta are going to get bigger bonuses this year. In a new filing, the company said it had approved an increase in the target bonus percentage for its annual bonus plan for executives. Named executive officers could earn a bonus of 200% of their base salary under the new plan, up from the 75% they earned previously. The updated plan does not apply to Mark Zuckerberg, the CEO. The board committee said it approved the change because the target compensation for its executives was at or below the 15th percentile of executives of compensation at some of its peers, some of its peer companies. The disclosure of the bonuses comes a week after Meta began laying off 5% of its overall workforce. And according to an FT report, Meta also slashed its annual distribution of stock options by about 10% for thousands of employees. But companies do, 5, 10%, companies do that occasionally. You remember Jack Welch used to be, if you're in the bottom 10% of performers, start looking around for things. And that's why I think it's very weird. We're talking about the IRS, and we'll talk about that a little bit later. And we talk about these government layoffs, and the violins and the crocodile tears are out. But the private sector does this all the time. And the private sector is under different constraints, obviously. They don't have the taxpayer backing everything they do. So it's much more difficult for a private sector company to get totally bloated and wasteful. So you should really assume that there's at least 10% that could go in a lot of these agencies to start with. If it was the private sector, it'd probably be a much bigger number. And no one is happy to see anyone lose their job, obviously. But the world is a place where low performers or people that really aren't coming in with the same type of energy and enthusiasm, and I won't call them slackers, but
you need to cull the herd every now and then.
You do, and I'm glad you agree with me a little bit.
No, I think you do.
I know how much you wanted to expand the IRS a lot. There's 100,000 IRS employees. This is going to be 6%. It's going to be about 6,000. I just think that is a doable number without bringing out the violins.
Look, my only thing about the IRS...
You want compliance. Because
I want compliance.
You don't even have to raise taxes.
If you don't even have to raise taxes.
If you get compliance...
If you just get compliance. And it's like the one place in every business that you do not cut is the guy...
And that is what they're cutting. It's
who brings in the revenue.
Right.
If there's a revenue office, that's the office you invest in because you want the revenue.
I hear you on that. I just don't know whether the compliance, you've got that maybe we need more people because some things are slipping through the cracks. I think that maybe there's plenty of waste there already, and you could do just as good a job with fewer employees.
So you think that the IRS is just doing a bad job?
No, I think that the IRS is probably like everything else. It's probably got a lot of bloat and waste and
Sure, but then you have to then invest in the technology.
Maybe you do that.
You have to do. There's a lot of things you have to do to get right.
That's a lot cheaper. That's a one-shot deal. That's not people that you have for year after year after year.
But then part of it is, unfortunately, for compliance, especially among the most sophisticated folks, it's not compliance is like lawyers.
Yeah.
It's people who actually are going to go in and be able to look at some of these tax returns where people are doing all sorts of funny business.
Well, you know all about that stuff. As a W-2 you know about the LLCs and you know how people can.
And that's where
I'm stuck, man.
The money is.
I'm stuck. I tell my the guy that does my tax, I say, do something, and he says, I can't do anything. This is what you have. This is what your deductions are here, and it's impossible. It's impossible. I'm happy to pay. I don't use that line at the bottom where I can voluntarily pay more. Has anyone, I think that they should just remove that, don't you think? Just a waste of ink, waste of paper.
You could save some money, I think.
Save some. No one has ever said, let me pay more.
Robert Frank is at the table this morning to explain what this all means as tax season is about to get underway.
Tax season is underway.
He heard us talking.
I said,
and put this together so quickly. He put this together so quickly. Did you rush down here?
I did. I said, these guys need some numbers behind this story. So let's give you the numbers. The IRS firing between $6 1,000 and 7,500 staff yesterday. Now, many of them work in compliance. That, of course, deals with audits and collections. Under the Biden administration, the IRS received $80 billion in new funding to help improve service to everyday taxpayers and, of course, to crack down on tax evasion by the wealthy and by corporations. The aim was to hire about 20,000 to 30,000 new people to bring staffing back to where it was at the IRS a decade ago. The IRS estimated that millionaires and billionaires evade over $100 billion in taxes every year, mainly through complex partnerships and pass-throughs. Now, those efforts are likely to stall or maybe even get rolled back right now. The audit rate for those making more than $10 million a year has fallen by half since 2010, now at about 11%. Training auditors to handle those complex returns takes at least 3 to 5 years, and many of those fired were just starting that training. So collections, especially from the wealthy, could fall in the coming years, especially since the most experienced agents are also taking buyouts. Now, the tax gap, that's the amount of taxes owed but not collected, that has grown to about $600 billion a year. So Andrew is right that we have a lot of taxes that go in collected. You're also right in that technology could help improve a lot
I can't believe that.
I was the one talking tech too. Don't I get a little bit?
You do. You get credit.
Yes, yes.
Because there's no way we need to go back to where we were 15 years ago, given all the new technology and AI and everything else. So that's an anachronistic comparison. I don't know about these numbers, whether they're they sound, I don't know, they sound estimated. How do you know it's $600 billion?
Oh, right. No, it is estimated.
Totally estimated.
But you also know that between crypto and between the payment services where people are sending each other all this income through, you know that there's a lot that is missing right now that they're not catching.
If you can't do it Andrew's way or my way with technology, see, I'm sure there's at least 6 to 7.5% bloat at the. I'm sure of
course. The question is, it's not that are there too many people? Is that do you have the right people doing the right thing?
Do that.
And so a lot of these people getting fired were in customer service. So typically it took a half hour when you called the IRS to get a response. Last year the average wait time went from 28 minutes to 3 minutes. A lot of the reason is because we have all these people answering the phones. They're going to go away. People are going to get very frustrated.
If you can't do it, it's a flawed decision because the money that Trump, the Doge, is going to save from getting rid of these guys is not going to be the same amount. It's not going to be anywhere close to the money that you're not getting from doing these audits.
We'll have to see. Unless they can improve the technology.
Unless they can improve the technology. And why would they do that? Then the only thing you could say is he's trying to help his wealthy friends not get audited. And I don't believe that's the motivation. But it's another giveaway to
look, as you said, with 100,000
But if it doesn't net out to where you're getting more, if you get more by having these people stay than you do by rationalizing the 6% of the workforce, then it makes no sense to do it.
To Andrew's point earlier, a lot of the tax gap are these very complex partnerships.
The worst part about it is you need lawyers. It's illegal. It's a legal game because what's happening is people aren't filing their tax returns properly. And then they're challenging effectively what the audit even is.
That's right.
And then they have to go to court. And so the only way you can actually get the money is to go through the court process.
And the IRS right now is so outgunned and outmanned by, the lawyers, the accountants that are like rocket scientists of the tax code. They are so much smarter and better paid than the IRS agents that they're winning the game right now. So
it's a simple answer, Andrew.
What's the answer? Get rid of every possible deduction in the world.
No.
What?
Get rid of the income tax and do tariffs.
Oh.
The External Revenue Service.
The External Revenue Service.
Exactly. The Dow's down.
I see that.
The Dow's down because of
the story you're about to read,
which I was looking at. UnitedHealth. And it's a look at the.
It's a doozy. It's a doozy.
And look at the bid and ask on UnitedHealth, the Dow component. So just do the math on what a point loss of 28 points on a Dow component does to the average. Justice Department launching an investigation. This just crossed at 7 into UnitedHealthcare's Medicare billing practices in recent months. This is people familiar with the matter telling the Wall Street Journal. It's a civil fraud investigation, and it's examining the company's practices for recording diagnoses that trigger extra payments to those Medicare Advantage plans, including at physician groups that the insurance giant owns. So there's a lot of interesting.
A lot of component parts
A
here.
lot of people don't like those Medicare Advantage programs and thinks that it's rife for abuse. But if you're wondering what happened to the Dow, that's it. We'll have more on this. It's somewhat complicated, as all healthcare is at this point, especially when UnitedHealth has done so. How does it do so well with a government program with Medicare? Makes you wonder.
We'll discuss all that and more. I'm sure we'll bring you a lot more on that stock and that story in just a moment.
Cheese will be next.
Still to come on Squawk Pod, a striking DOJ investigation into UnitedHealthcare and how the insurance giant makes a profit. Dr. Scott Gottlieb joins us.
A lot of this relates to the Byzantine way people are forced to bill Medicare, and I think the solution for this is to move towards more capitated models of reimbursement where provider systems are given lump sums of money to take care of an overall population rather than billing for individual patients.
And bird flu, should we be worried?
I think the administration is going to roll out some new policies next week to try to increase egg supply in this country, reduce culling of flocks, potentially vaccination. It's going to be difficult.
Welcome back to Squawk Pod, today with Joe Kernen and Andrew Ross Sorkin.
Stand by, Joe. Here's Mike. Cue.
The DOJ has launched an investigation into UnitedHealth's Medicare billing practices. This is according to the Wall Street Journal report. It's a civil fraud investigation. It's focused on the company's practices for recording diagnoses that trigger some extra payments to Medicare Advantage plans. Join us now for more on this and other topics. Dr. Scott Gottlieb, former FDA Commissioner and a CNBC contributor. He's also a board member at Pfizer and Illumina. You know this, all these things inside out, Doctor, and there have been myriad complaints about some of these Medicare Advantage plans. Reading about how this works, it could certainly be rife for abuse. I'm wondering whether you have anecdotal evidence of things like this occurring. Do you understand what they're saying? That you get a lump sum from Medicare for these Advantage plans. If you find some additional diagnoses, you're able to go back to Medicare and say, you owe us more money. And in this investigation, they seem to have identified people that said there was pressure from UnitedHealthcare to push some of these obscure diagnoses that people didn't really have just to get the additional payments from Medicare. Do you know whether that goes on?
Well, look, this relates to the story that ran in December in the Wall Street Journal, it looks like, where there was a story that showed that Medicare systematically upcoded the sickness scores of patients as they transitioned from fee-for-service Medicare into Medicare Advantage. So they showed a 55% increase in the sickness scores of patients as they transitioned from fee-for-service Medicare into Medicare Advantage versus an industry average of about 30% for patients who transitioned into Medicare Advantage plans, versus if you look at patients who just remained in fee-for-service Medicare, their sickness scores went up 7% year over year. So it looked like UnitedHealthcare was an outlier in terms of how they were aggressively upcoding patients as they transitioned into Medicare. Now, it is the case that Medicare Advantage plans do a better job on the whole of identifying comorbidities and do a better job of systematically coding for them than patients who remain in fee-for-service Medicare, because there's a financial advantage to do that, and there's also a financial incentive to try to more aggressively manage the overall health of that population. But UnitedHealthcare, being an outlier in this regard, attracted a lot of attention when that article hit. I will say that this is a industry-wide practice. A lot of health insurers, Medicare Advantage plans, adopt different tools to try to incentivize and prompt physicians to code for things like hypertension and obesity, things that might not be noticed in the chart and not necessarily billed for. So if the DOJ goes after this with respect to UnitedHealthcare, I think it's going to send a chill across the entire industry. A lot of different Medicare Advantage plans and healthcare services providers are going to have to relook at their practices if, in fact, this becomes something that is a target of the investigation.
And UnitedHealthcare says, hey, preventing chronic diseases early is what we want to do. So they've got a ready-made sort of an answer to why they might find more things than usual. But then again, you've got some individual cases where someone was told there's something, I don't even know what this is, doctor, aldosteronism, which is a secondary hormonal condition. You don't even need a blood test. So someone could go in and say, you've got this. You could bill Medicare for it, whether they have it or not. It just seems rife for abuse. But then again, the company probably has an answer for that.
Well, look, a lot of this relates to the Byzantine way. People are forced to bill Medicare, and I think the solution for this is to move towards more capitated models of reimbursement where provider systems are given lump sums of money to take care of an overall population rather than billing for individual patients or getting these sort of upcharges or, additional revenue if they can diagnose patients with more illnesses. And so we used to worked at Medicare and Medicaid, we used to describe working there as a game of whack-a-mole, trying to keep up with what the healthcare industry did to try to, frankly, game the different billing systems that Medicare rolled out. And so I think trying to pay for the overall health of populations rather than individual patients and looking at these kinds of sickness scores that allow Medicare Advantage plans to get additional revenue, ultimately that's where the solution is going to lie, different kinds of mechanisms. But as I said, this is an industry-wide practice. UnitedHealthcare does look like an outlier based on the Wall Street Journal's reporting. You never want to be an outlier in these regards, but there's an incentive in the program to get patients diagnosed and manage the healthcare of patients more aggressively, and they're paid for doing that. And so, health insurers have responded to that by implementing these systems that prompt physicians to look for these diagnoses, code for them, and then bill for them.
Doctor, just real quick, obviously a lot of people are going to relate this in their mind to the murder by Mangione and what that's all about. How do you think about that in terms of this investigation as it relates to that? And I don't even know where to go with this.
Yeah, I don't think about it. I think that was a violent crime and has no bearing on this by someone who seems to be deranged, quite frankly. This is completely separate. These are billing practices that result from the policies that Medicare has put into place. And that's not to absolve UnitedHealthcare of potentially gaming these systems, but we need to look at the way, we ultimately ask people to bill Medicare.
I look at it a different way. I look at it, you've got something for everyone. You've got potentially a predatory, for-profit company gaming the system at this fat, bloated government agency that wouldn't know if it was getting stolen from if its life depended on this bloated Medicare system. What do you think at this point the fraud and waste at Medicare and Medicaid is, doctor? Is it 30%? I mean, this is why we have a problem.
Yeah, I don't think we can put an estimate on that. I'm sure people have tried to do it. I haven't seen them. But look, like I said, if you're going to be billing Medicare for individual diagnoses like this, and you're going to get incentives for trying to turn over different illnesses that patients may have so you can upcode for the care of a population of patients, people are going to implement systems to try to turn over those diagnoses. And sometimes they're going to go too far. And maybe that's what happened in this case. UnitedHealthcare was doing it more systematically.
But did Medicare have any idea?
We don't know.
Is there anyone minding the store of the taxpayers?
It's very retrospective. Yeah, look, it's very retrospective, and that's why I said it felt like a game of whack-a-mole when I worked there, where you were always trying to play catch-up to what the systems were doing to try to, frankly, find ways to legally game the billing system. We can move towards different reimbursement models. I think that could help resolve some of this, where we just pay lump sums for populations.
And then you don't want to turn anyone down, because then you're back to your question.
Right. Doctor, talking about when you were there, I just want to go back, actually. This is a separate topic, and I want to also get to eggs and everything else that's going on. But did you see, there was an interview that Dr. Deborah Birx, who you worked with during the Trump administration, just did with Piers Morgan, where she said very explicitly that the COVID vaccine was, quote, not designed to prevent against infection, and effectively said that it was mismarketed by not just the companies, but effectively the government. And I'm so curious what your reaction to that is.
Yeah, well, I wasn't in the government at that time. I was in the private sector and on the board of Pfizer, as you know. So I didn't overlap with Deborah Birx. Look, when the vaccine was first rolled out, if you remember, on this show, we talked about it many times. We were very careful to say that the vaccine, we didn't know if it prevented infection, because the original data showed that it prevented severe illness and hospitalization and death in patients. We presumed that if you were reducing infection rates over a population, that it would prevent infection, but we didn't know that, and we were very careful to say that we didn't know that. When the data came out from Israel showing that dramatically reduced infection across populations, that's when that information started to get into the label. The vaccine was initially very effective at preventing infection across populations. As the virus mutated, it became far less effective. And now it's more like the flu vaccine, where it reduces the severity of illness in a lot of patients, but it doesn't dramatically reduce their ability to transmit the infection across the population. Initially, it was against that original Wuhan strain. It was when the virus mutated that the vaccines became less effective. And I think that's a reality that we're going to have to deal with going forward. This is going to be much more like the flu vaccine, where, yes, it probably prevents infection on the margin and transmission because it's reducing the number of infections in a population. But the bulk of the benefit that you get through vaccination for things like COVID and flu is reduced severity of illness if you do, in fact, become infected.
And, Doctor, I do want to get to eggs, but I have one more thing back to this Medicare conversation. Mm-hmm. Are we talking about Medicare, or are we really talking about Medicare Advantage? Which I think is a...
You're talking about Medicare Advantage. You're talking...
Right,
yeah.
because
but writ large, Medicare
but
Leviathan.
Medicare, no, but it's Medicare Advantage that is the concept that is the actual problem in this instance, right? Because what happens is the insurance companies get the Medicare dollars, and then they deny the care, and they get to keep the money. I mean, isn't that what's happening here? But that's a Medicare Advantage problem. I'm not sure that's a
then
Medicare
they get more money
problem writ large.
The issue here is patients who transition from regular fee-for-service Medicare into these Medicare Advantage plans. And in the first year that they were in these Medicare Advantage plans, they were suddenly diagnosed with a lot more illnesses. Now, there is some reality to that they're going to be more aggressively managed, so they're going to turn over more diagnoses as they transition to these plans. And that's probably a good thing because these plans are more aggressively managing the health of individual patients and populations. The question is the magnitude. And UnitedHealthcare does appear, based on that Wall Street Journal reporting, which I think is the subject of this investigation, does appear to be more aggressive in additional coding on these patients.
Yeah, Medicare Advantage is the United thing. It's not Medicare. That's what I said. So I said there's something for everyone. You got the predatory, theoretically, the predatory Medicare Advantage company with this clueless Leviathan with it has so much money and no.
But I just think there's look, we can complain about Medicare, but I think the problem is the whole concept of the Medicare Advantage, the way
I disagree.
The way it works.
That's one way of game. Then there's 10 other ways of screwing Medicare where they don't have a clue, aren't there?
Look, there's a lot of benefits from Medicare. There's a lot of benefits from these Medicare Advantage plans because they do have an incentive, and they're paid to try to more aggressively manage the health of patients. And there are studies showing improved outcomes. Now, it can go too far, and I think Medicare needs to be vigilant around these things. Ultimately, they're going to have to change the way they pay for these because as long as they have systems that give incentives, financial incentives to, get more diagnoses on a chart, people are going to look for diagnoses. And if you don't like that and you don't want to have to pay for that, we need to move to different kinds of billing systems.
And
like I said,
Medicaid,
it's a game of whack-a-mole. You're always chasing.
How much waste is in Medicaid right now? And there's no governor on it. There's no...
Okay, we didn't even get to talk about eggs.
Medicaid's going to be...
The whole idea...
Eggs are still cheap.
No. I want 10 seconds from the doctor on eggs. Should we worry about them giving the birds vaccines so we can get more eggs into the population, or should we just effectively kill the birds?
Yeah, look, I think the administration is going to roll out some new policies next week to try to increase egg supply in this country, reduce culling of flocks, potentially vaccination. It's going to be difficult. This virus has become endemic in the poultry flocks in this country, and I'm not sure we're going to be able to extinguish it. And once it gets into a poultry flock, it's 100% fatal largely into chickens and spreads very quickly. So just reduced culling may not be able to contain this. And we may be in a protracted situation where we have reduced egg supplies. It takes 6 months to hatch a chick before it can start laying eggs.
Yeah. Okay, doctor, I'm trying to be on a high protein diet right now. The eggs that's a very important part of the...
Your cholesterol will be so much better after 6 months from now.
Next on Squawk Pod, big news for Coinbase. CEO Brian Armstrong says the SEC will drop its lawsuit against the crypto buying and selling platform. That news, plus what he thinks of another upstart, prediction markets.
I actually think of it's less of a trading product and it's more of like an alternative to the New York Times or something.
We'll be right back. This is Squawk Pod.
Up and Andrew, Q.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Joe Kernen on this Friday morning. Becky is off. New this morning, Coinbase saying the SEC has agreed to dismiss its enforcement case now against the company These are the charges that were filed back in 2023. By the way, the stock up about 5% on the back of this news. That investigation and the effort started in 2023 when the SEC sued Coinbase for operating as an unregistered securities exchange broker and clearing agency for failing at the time to register the offer and sale of its staking as a service program. Now, I spoke to Coinbase's co-founder and CEO Brian Armstrong about how all of this happened.
First of all, this is a huge day for us and also for the 50 million Americans who hold crypto, the whole crypto industry in the world. I think it's a really important signal that this small group of activists in this prior administration who tried to unlawfully attack this industry, we're going to be able to turn the page on that and finally get some regulatory clarity in America. But to answer your question, how this all happened, I mean, yeah, in 2023, they came to us and said, we think you're trading securities on your platform. But the problem with that is if you go back to just a few years prior, we had gone public. We had explained everything about our business to the SEC. They asked us a million questions. They knew exactly what our listing process was and how we took a very conservative approach. And then a few years later, the political climate changed and they suddenly changed their mind. But that's not how it works. If you're a regulator, you can't just make up new rules if you don't like the existing ones. They have to follow the law and they have to publish clear rules that the industry can then adhere to. And so this case was bogus and we were right on the facts. If we hadn't stood up for our customers' rights and actually pushed back against this, it could have been the end of the crypto industry in America. So I'm incredibly proud of this outcome and what we did to defend our customers' rights.
In terms of how this is all going to work in practice, what's the next step in the process? So do the commissioners have to vote?
Yeah, what we're told is that next week the commissioners will vote on it. It seems to be a formality at this point, but the staff they're telling us they're recommending to the commissioners that this be fully withdrawn. And I want to be clear, this is not a settlement where we pay some fine and admit some wrongdoing. This is just they're fully withdrawing the case. And so we're not changing anything about the business. We're not paying a single dollar as a fine, which I believe is quite unprecedented in SEC history.
The other thing I was going to mention is I was listening to the Q&A that you had done on your quarterly call, which I know you broadcast on X. And you talked about prediction markets being another opportunity. You know, we saw Robinhood ended up removing contracts for the Super Bowl. I don't know if you saw that ahead of the big game. Mm-hmm. And I'm just curious how you're thinking about prediction markets and just how much scrutiny that area or that product may turn out to have in this environment.
Yeah, well, I am excited about prediction markets, and I think the new CFTC chair, Brian Quintens, is certainly very thoughtful on this topic, and he's going to have to figure out how to create a trusted environment where these things can be built in the United States so Americans can use them, but also make sure that consumers are protected. So as an example, you'd want to make sure that you don't have any sort of prediction market where someone might be incentivized to harm another person, right? Just sort of basic rules like that. But overall, I think that people are going to use prediction markets to figure out what's actually happening in the world. I actually think of it's less of a trading product and it's more of like an alternative to the New York Times or something. If I can say that on your program, I hope Mm-hmm. I know you work with both companies, but I think people are trying to figure out what's happening in the world. They're increasingly worried about misinformation and they want a source of truth. And prediction markets are emerging as an important source of truth where people have real skin in the game. And that's an exciting development where crypto can help.
Where do you land these days on meme coins? I don't know if you saw, by the way, there happened to be for a hot minute a coin with my name attached to it. I was not involved in it. It just came out of nowhere. And I watched, it was actually sort of fascinating to watch the development of what was happening and to see people on X and on some of these Telegram accounts and other things really trying to push it up, and then of course questioning whether when they were going to sell and what they're going to do. And I will admit I found it fascinating, but I was also sort of uneasy about it. It still exists to this day. What do you think about the phenomenon?
Yeah, well, meme coins in the broadest sense, I think we should find a way for artists to get paid. Anybody should be able to put artwork, they should be able to get paid for it. And I do think meme coins are a canary in the coal mine that more and more of the world is going to get tokenized and put on chain. Every asset class, every vote, every identity, every song, every Instagram post, whatever in the future, I think more and more of these things are going to be tokenized. Now, we also need to make sure people are following the law and not doing pump and dump schemes or insider trading. And there probably has been a little bit of that in the meme coin space, which is not helping anybody. And so in every crypto cycle, there seems to be people who rush in and they forget these lessons of the past. But insider trading should obviously be prosecuted and people should avoid doing that unless they want to go to prison.
Do you think that the same insider trading laws that exist today for stocks, for example, should apply to the crypto world?
It's an interesting question, actually. I think Brian contends and others are thinking about this through the prediction market lens. I mean, in the broadest sense, yes. I think that most of the same rules should apply. It should be a level playing field around insider trading. There's an interesting question for prediction markets of like, do you want to let insiders trade? In the commodities world, it's sometimes a different question than in the securities world, right? Like if something is truly decentralized and anybody could have information on it, it may be a different lens, but I'll leave that to the regulators to think about. I haven't formed my opinion on that fully yet.
Right. I'm fascinated by all of it because I'm watching, for example, I don't know if you watched the whole Argentina President Milei, apparently post about Libra, and then he took down the post, and there's all sorts of controversy about whether he was pumping this up. I mean, that's the thing that just seems so different about this world than maybe the stock market's more mature today than what we've seen before.
Yeah, well, I do think we're in early stages of this industry. So it's the Wild West a little bit, like with meme coins right now. And there's good that comes with that, which is a lot of innovation is happening. There's some bad happening as well, where from what I understand, it sounds like President Milei accidentally shared that information without understanding exactly what he was sharing, if you believe his comments. So yeah, my hope is that this gets cleaned up and people continue to think long term about how we're going to create real value for the billions of people in the world who need an updated financial system. I
wanted to ask you one little comment. I was curious. I don't know if you saw it. Tyler Winklevoss tweeted the following: as long as MIT has any association with Gary Gensler, who of course was a tormentor of yours to some degree, Gemini will not hire any graduates from this school, not even interns for our summer intern program. Did you see this?
I did see this, yeah. You want me to comment on what I think? I'm happy to share my thoughts.
Curious.
Well, okay, so I don't think MIT should have hired Gary Gensler. I think that was a mistake on their part. And, I don't believe in canceling people. I think he should be able to go find his next career and try to create value in the world. But his actions at the SEC were a real anomaly, and I don't think that should be taken lightly. There was some unethical behavior in my part, so they should look. I think MIT should look into that. Now, to Tyler's comment specifically, I don't think they need to punish the students who are attending MIT. Maybe hopefully they don't even take Gary Gensler's class. But I'll leave it to MIT to figure that out. Obviously, that's not something I need to be directly involved in.
Big move, clearly by the SEC, and it's a big switch in terms of how the Trump administration is going to be reacting to all of this. You could also argue, part of one of the reasons either Trump got elected was because of his take on crypto. The flip side of it is critics would say that the crypto industry gave the Trump administration an extraordinary amount of money during
but
during
didn't
the campaign as well.
We were involved with interviewing him back when this was all happening. And
yes.
At the time, it seemed like it was meritless.
Well, the big issue is we just haven't had actual laws and legislation to figure all this stuff out.
I know, but even without any laws, Gensler still seemed like he would shoot first and the laws could come later. You know what I mean? He was after these guys.
I think the big issue was that the SEC was approaching its enforcement by legislation or enforcement by
that's what I mean.
Action as opposed to legislation.
And I don't think this is. I think this is vindication from a better SEC that doesn't have a conflict of something. I don't think it's because people paid off.
I'm just saying, look, there's two sides to this, which is some people will say that this is exactly the way you suggested, and others will say the industry
and it's mature.
By the way, had the industry not supported Trump, if the industry decided to support the other side,
still would have happened.
Who knows?
Probably. And the industry has matured, and there's less. I don't know. It doesn't have quite the target it had on its back when it was more unknown, and I think. You see, the institutionalization of crypto.
All of the different, right. All I'm saying is, for example, this president has his own meme coins.
It's possible that the Biden administration and whoever was in Gensler's ear was dead wrong about all these things and out of line. and out of line. And it costs how do they get to $50 million
Very well may have been.
How do they get the $50 million back? It's like, oh, sorry, we sucked at our job regulating this industry. We didn't regulate it, in fact, because we didn't know how to. And your collateral damage.
I'm just saying that
your collateral damage of our
I'm not
misguided.
defending either side. I'm just saying that there's a lot of sides to this.
Your collateral damage of our misguided efforts. If it cost you $50 million, sorry.
That's Squawk Pod for today and for the week. Happy Friday. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Becky will be back on Monday. You can tune into Squawk Box on TV any weekday morning, starting at 6 a.m. on CNBC. To get the smartest takes and analysis from our TV show right into your ears, hey, I got a podcast for you that does just that. Follow Squawk Pod wherever you like to listen. Tell a friend to follow as well. Have a great weekend. We'll meet you right back here on Monday.
We are clear. Thanks, guys.